Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. Believe it or not, we have some economics stuff because a significant event happened yesterday for most of you watching this video yesterday in the PPI report, and the PPI report coming in very hot. My goodness, I wasn't even prepared for this a little bit. And wow, okay. So CPI, if you're wondering what in the world happened, all right, CPI came in very favorable, but PPI came in hot, which means what? Well, let's take a look at this tweet from Brett here. PPI came in hot. Headline: PPI year over year 3.3%, expected 2.5%. Ouch. Previous 2.3%. Core PPI year over year 3.7%, expected 2.7%. So this means producers are seeing significant cost increases typically passed to consumers in a few months. Businesses have been absorbing these costs for now, but they either hurt their earnings or increase their prices to the consumer. Tariffs are likely a large portion of this, which Powell has been very vocal about. This will give Powell a reason to not cut as fast. You know, I meant to pull this website up, the CME Fed Watch tool. I try not to measure things all that much in terms of, oh no, what does this mean? I just really rely on the tool. And right now the tool is saying 92.9% chance that they are going to cut rates. They're going to cut rates in September, but I mean, what this means for future months is a little bit more unclear, and so the market has to price that in now. Now, whatever the case, you know, there's one thing I want to point you to, and it's just the difference between now and 2021. In 2021, at the peak in November, it was on the day of the CPI report. That CPI report came in scorching hot, and rates were at zero. And so what's the market pricing in? The market is pricing in rates being increased a lot more from the day of that scorching high. It was 6.9% CPI report. The idea that inflation was transitory, it died that day. We are in an entirely different environment right now where they're not going to increase rates, and they're certainly not going to increase rates to the extent that they did. I mean, they increased it up to what, 550 to 575? I think no, it's a little bit less than that at the peak in 2023, 2024. And so that's a huge difference between now and 2021 is, yeah, Bitcoin's at an all-time high, stock market's at an all-time high, but the environment in which Bitcoin got to those levels and the stock market is flipped in comparison to 2021. There was a lot more froth in 2021. If you look at the S&P 500 and the NASDAQ priced in gold, what you would have seen is that both of those peaked in 2021. And I think the Dow Jones peaked in 2018. So very different, very, very different environment. And this is not something that I'm nearly as concerned about it as if we were in a different situation or a situation similar to 2021. Very different. So another thing to pay attention to, Jordan Lindsay. You got to follow Jordan Lindsay. Let me talk about Jordan Lindsay real quick. He's better at this than I am. He's better in almost every facet, and especially economics. If you lean on my content because of my economic views and how my economics has informed the bull run, which I think has been very helpful, then he's somebody better to pay attention to. And guys, I'm not going to boast too much, or I'm not going to be shameful in my boasting. There is something that I offer that I think is unique that you won't find anywhere else. But as far as those who I would fully admit, I think you'll benefit more from listening to and following these people, or maybe, you know, we can complement each other. Blockchain backer Jordan Lindsay. The list is small, but Jordan Lindsay is definitely on that list. So Jordan Lindsay, in terms of PPI, what's he talking about here? Corporations are absorbing tariffs. There's no doubt about that, which means margins are being squeezed. Next earnings season just became the most important earnings of this bull market. It's going to be really interesting to see also what happens in September, because that's going to be before the next Fed meeting. You know, so we'll have the CPI report right before that Fed meeting. We'll have the PPI report. Hopefully, we'll see some pleasant surprises. If so, then we'll rally after that. So anyway, moving on, some technical things we have from Nebraskan Gooner. I have two tweets from Nebraskan Gooner. Let me explain him. He is as unemotional of a trader as I could possibly imagine, and it's mostly very largely a strength that he is unemotional. He doesn't really pay attention to, I guess, cycles or all that much. He's just looking at the chart. And so here's Nebraskan Gooner's analysis. And listen, I'm making this video at 2:34 p.m. Eastern time on Thursday, and you're most likely watching this on Friday unless you're a member of this channel. Join the channel as a member. You get it as soon as it's published, or as soon as I upload it to YouTube, I should say. But I'm very curious to see where this day closes. Is it going to be a bearish engulfing candle? Well, you know, bearish engulfing candles most of the time, not all the time, but most of the time do that. That's a bearish candle. Obviously, it's called bearish engulfing. And so we'll look at that here in a second. But Bitcoin, I don't like how this looks. If we close below yesterday's candle base, then oftentimes we will see further downside with the structure. And he draws a squiggly line down to something like somewhere between $112,000 and $114,000. So let's take a look at that. Could Bitcoin get there? If you remember my video from 2 days ago, I talked about the potential of Bitcoin going down. I did not expect a new all-time high under the scenario, but Bitcoin going down back to a retest of that 112. I didn't think 112, maybe like the mid 110s, which we've gotten to 117 so far today. And so a couple different scenarios. Let's say that he's right, which he's probably pushing it a little too hard. I just want to admit that. But we have scenario number one where we just do another back test of the previous all-time high, that May all-time high at $112,000. Could it get there? Sure. I don't think so, but if it does, I'm backing the truck up and I'm opening a higher than normal leverage long on that. You can see the bearish engulfing candle here, exactly what he's talking about. Let's see how we close the day. If we close the day and that bearish engulfing is gone, then fantastic. You know, I mean, you can see a false breakout of this trend line here. I would expect next time we get up there, some resistance back at the trend line, you know, 120, mid 121s, something like that. So that's one scenario. Here's another scenario. I have here this multi-year trend line. This is a 7-year trend line that we did have, kind of what I would explain as our spring moment. If you're looking at Wyckoff reaccumulation, the spring moment where it looked like we lost that for a couple of days, but then we reclaimed it. And what if we saw some kind of a revisiting of the 7-year trend line? That would put us, if it happened like next Tuesday or something, that would put us around 114.6. So again, that's a scenario. I'm not saying that's absolutely going to happen, but there's two places that I think Bitcoin would be at an extreme value if we saw Bitcoin go there, and I'd want to load up for just, you know, a trade of sorts. Something encouraging that I'm looking at on the chart here is just seeing Bitcoin dominance. Bitcoin dominance, at least right now, is red on this negative day. Usually, I mean, you guys know the drill. When we see a big flush out in the market, that means altcoins are usually suffering a lot more than Bitcoin. But that's not the case today. So far, so good. Nebraskan Gooner again. This is a chart that I do not agree with. I've seen fractals like this before, and no, we are again in an entirely different environment, and I'm not necessarily appealing to where rates are right now. I'm appealing to where just where we are with institutional adoption. It's insane. It's just, we have accumulated the institutions, the ETFs, they have accumulated much more Bitcoin than I ever imagined, and that freight train is not stopping. But okay, 2021, all right, comparison to 2021. Has anyone else noticed that the topping price action in 2021 looks exactly the same as the current price action? It doesn't look exactly the same, but I love you, Nebraskan Gooner. Anyway, Top Goon X also gave a sell approaching alert at the same spot that we're hitting the exact same Fibonacci resistance. Okay, cool. You know what? No, this is not going to be a repeat of 2021 where we're going to go, to $55,000. There's still plenty of legs in this bull market, just especially on days that, you know, a lot of people were really scared yesterday looking at the price action. I had to calm some people down in my live stream. No more questions about, oh, can such and such cryptocurrency 10x? You know, I got those questions the day before, but obviously not on a red day. And you're going to see a chart like this, and what are you going to do? You're going to be scared to sell. You're scared into selling your crypto, and I would just hold tight. All right. Now another one that there is some agreement with this chart. Not with this chart. He's not necessarily presenting this as another comparison to 2021 for Bitcoin, but it is something I sold. I had some shares. I had like $2,000 of MSTY, the Yield Max MicroStrategy ETF. if you have that, I'm just telling you my opinion. I think it's time to cut that loose. And the reason why is MicroStrategy, I believe, has peaked for this cycle no matter where Bitcoin goes. It's just how MicroStrategy works. It's really frustrating, but cool, whatever. MSTR 2021 versus 2025. In the post below from December, I wrote, will Bitcoin pump to 125 to 150 without MSTR making a new high? 124 hit so far, and MSTR would need to pump 46% to make a new high. It's hard to say these two charts don't look mighty similar. Ideally, MSTR would want to stay above that red line. So what's the red line? 370, and MSTR is close. Whatever the case, I mean, I don't care. Now, I'm going to be buying a lot of MicroStrategy in the bear market. I made the mistake. I bought Bitcoin miners. I bought Riot Blockchain in Marathon, and MicroStrategy. Those barely did anything, but MicroStrategy killed it. So awesome. For those of you who bought MicroStrategy, I think that's the way to go. I mean, we'll see, the intensity of this next bear market whenever it comes. But, there are similarities, big peak. When was that? That was in February. Man, MicroStrategy peaked in February of 2021. Yikes. And I mean, Bitcoin peaked in April of 2021. And that second peak, that was when Bitcoin peaked. And then November of 2021, it got back close to that April peak, and then it was over. So yeah, MicroStrategy does look similar now in many ways, but that does not necessarily mean that MicroStrategy is going to go to the dumps, especially, again, different environment than where we were in 2021, but something really interesting to pay attention to. Now, we have from Income Sharks here, a metric that I don't talk about enough, and I really should. It's on balance volume. It's OBV, and I'll explain it in a second. But ETH, when in doubt, check OBV, breakout and retest. We could come all the way down to 4,100 and still be bullish. I don't think Ethereum is getting down to 4,100, but breakout of this peak in early August, a retest of that. He's saying that would be around $4,100 for Ethereum. What is OBV? On balance volume is a very simple metric that I think can be very helpful. When you see OBV trending up or in an uptrend, you should be very bullish. So OBV is just a measure of volume, and on a green day, that's added to OBV, and on a red day, it's subtracted to OBV. So we're seeing a lot of green volume. This is a measure of green volume, okay? And it's something worth paying attention to, just another tool in the tool shed. I like the tools that I have, but something worth paying attention to. Bring us down to 4,100. It's just a simple back test of that, but it is what it is. I mean, it may not be even that 4,100 would be a back test. So, the longer we go, if we just have some high volume but slightly red days, that would bring us down to that level. So anyway, Ethereum. Look, I mean, does this chart really scare you all that much? I mean, it might be scary in some ways, in the fact that, all right, we've been scorching hot lately and maybe we need to cool off. Let me look at the RSI. So RSI is currently at 70. I mean, if you were to see RSI for Ethereum get to 40, it's back the truck up, but that's most likely not going to happen again. But I mean, yeah, sure, Ethereum can go a decent amount lower and remain bullish, and that's perfectly fine. Now, I did make a tweet yesterday. Oh man, I hate it when this happens. You see this line right here. It's 48.18. I set a notification on my phone that if Ethereum was going to get to 48.18, I was going to close all my longs. Oh my goodness, I'm so frustrated, and I closed a couple of them, but a lot of them are still open, and some are up, some are down. Ethereum, oh man, I should have just set it at 4,800 or a little bit below 4,800. Ethereum got to 47.95, so it was so close. And why did I set that level there? It's simply this. I talked about this in a tweet, but if you see Ethereum, historically what has happened with Bitcoin and Ethereum is what we've done in the past is we've broken through the all-time high, and then just a little bit, and then the leverage got flushed out, and we dumped super hard. This has happened literally every time that Bitcoin has broken its previous cycle peak. And then, so not every time it hits an all-time high, but every time it's broken its previous cycle peak. So one time that happened in March of 2024. It happened in December of 2020. It happened before then. And this happened with Ethereum in early 2021. In January of 2021, the moment it went through its all-time high, it did a little wick and then got shorted aggressively and dropped 27%. And so here I was ready to close my longs, close every one of my longs, and I'm still in a lot of them. So I'm down today, and I'm just like, every time this happens way too much. It's like I have all the tools I need to be a mega successful trader, and then something like this happens. It's just a part of the territory, guys, and it's all good. Just, we are going to break a new all-time high for Ethereum. I say that full conviction. The ETFs are buying an insane amount of Ethereum. They're actually buying a lot more Ethereum in terms of dollars than they are buying Bitcoin. And when that happens, when we do break the all-time high, I think that's going to happen. But this flush out might make that be less intense. So just keep that in mind, that the flush out, it might be less intense, honestly. So anyway, just be prepared for that, because I know I'm going to go live and a lot of people are going to be freaking out, and I'm trying to warn as many people as possible that is what's ahead of us. But what comes after that is a V-shaped recovery every time. So just be ready. Okay. Well, anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.